morning, everybody, and welcome to Wednesday Night Study Group. I am pleased to have Rob and Dean with me tonight to go over the fundamentals of support and resistance. Hi, Dean. Hi, Rob.
Hey, Ladine. Thanks for letting me kind of break into your party here. This is fun.
Hi, Ladine. Should be
Hi.
fun finding key levels in your charts. So
It's
it's
awesome.
fundamental. There we go.
This has been a relatively new study for me, but I found it fascinating. Support and resistance is one aspect of levels. Not the only one, but that's what we're going to be focusing on. So what is that anyway? What is support and resistance? Really, it's just areas where price has gone and you see a response on your charts. It's been there in the past. Will it do it again in the future? Let's look. Let's find out. Basically, this is historical prices where large numbers of orders accumulate to prevent a prevailing trend from continuing. If those words don't mean anything right now, that's okay. Just be patient and the dots will start connect as we go through this. We're going to be looking for the obvious where you see the price being rejected or supported. Now, don't be discouraged if the first time you see it, it's not obvious. Everything new is new until it's not. So it will become obvious the more you see it. The more you look at it, it's like those things will pop out. Some of the words that we're going to be using, these are kind of interchangeable: pivot points, comfort levels, supply demand zones. They're really all related to support and resistance. I didn't grow up in the trading world using support and resistance. I used some other terms, and it took me a while to realize, oh, we're really talking about the same things. Now, typically, these levels can be easier to spot on longer time frame charts. So what may not be obvious on a 5-minute chart may be clearer on a 15 or a 60 or 240 or a daily. We're really going to be spending our time on a daily chart in this session. When you see these levels on multiple time frames, they become more obvious. Then you can transfer those key levels to your shorter time frames for awareness when you're actually executing, you're plotting targets and strategies. Drawing these levels of support and resistance on your charts will help give you a plan when the price hits those levels and seeing how the price responds. So typically, it does the following. It pauses, it chops. You've heard of a chop zone? We use that term, a chop zone. It's going back and forth between two levels, two price levels, price points, or it reverses. Maybe it ignores the level altogether and it breaks through it to make either a higher high in an uptrend or a lower low in a downtrend. And we can use the moving averages to help with those levels of support and resistance. We aren't going to focus on that in this session, but they will play a role the further you get into this. Typically, the shorter the length of the moving average, the weaker the support and resistance it creates. So those longer term levels blend better with this concept. So for example, price will move through a 10-period moving average on a 5-minute chart more often than 89-period moving average. We already know that, right? You've used multiple time periods in your EMAs and you see that. The shorter time frame, it's more responsive, if you will, faster. The 89-period moving average is considered to provide stronger support for price when compared to the 10-period moving average. So we just talked about that. Traders can use any moving average that they like. Some common EMA periods are the 10-minute, 21-minute, 50-period, 89-minute, 200-period moving averages. All of those can be useful. Some are more useful in different time frames. What do we look for when we're creating our levels? We'll be spending some time on this, so you'll see that on the chart when I take this presentation off. Swing high and swing low. What is that? What does that mean? Multiple rejections in a range. Be obvious. Don't try to find a needle in a haystack. Back up and look at the haystack and look at what's obvious in the haystack. Why do we want obvious levels? Well, more traders, especially market movers, those are the big guys, and algorithms are seeing the levels, which increases the likelihood of a group of orders being placed at that level. Again, that's one of those things that once you start seeing it, it becomes more obvious. How did the price react when it got to that level in the past? Did it move away drastically? How many times did it get rejected? And we'll talk about all this stuff in detail. Look for levels that act as both support and resistance at different times. That was a concept that just didn't make any sense to me until I started seeing it and recognizing it. And then once again, it became more obvious. How recently was that level created or respected? Yesterday, the last week, 8 months ago, a year ago? Now, you don't need all of these elements, but the more of them you have, that great C word, the more confluence you have, the more confluence you have, the more aspects you have, just the better the signal, the more significance that will have. Now, should you use the wicks or the bodies or both? I don't know. This is not exact science. We're sharing a concept. You're ultimately going to be the one that determines which of those, or sometimes you may use all three of them depending on the circumstances. That's a personal preference. You're looking for areas or ranges, not a single price point. Although you may decide that a single price point is very significant. Some of our traders, it's just amazing how this process has led them to develop an incredibly specific guideline for recognizing where they want to place an order, where they want to place a stop. Don't worry about being that specific and that granular yet. It'll be way easier if you don't put that kind of pressure on yourself. Use ranges, use zone. Now, in the Ninja world, we're calling that the region Y highlight. In the drawing tools, it may be called that other places. I really don't know that many different charts. But you can encompass both the close, for example, of the candle and the wicks. So you're not sure which, do a range that includes both of them, and then you kind of figure it out as you go along. Do your best to keep your charts as clean as possible. This is going to be hard. This is difficult because you want to draw everything world on it. It's very tempting to do that, but then you get to a point where everything in the world's on it and you're not sure what you actually want to look at. So it's difficult at first. Do the drawing and then you'll realize, okay, I can leave that out. I don't really need that. When you have two closes that are very close to each other, use the region Y highlight as a zone between the two. So the region Y highlight's a great tool and it has a lot of applications. Look for big round numbers. Here we go with that O word. Typically, institutional investors, algorithms, and market movers will use large round numbers as key levels for them to buy or to sell. When you look back at your charts on the larger time frames and you see those big round numbers, 4,500, 4,800, etc., it shows you the confluence with support and resistance. A lot of time the resistance becomes support and vice versa. Does that sound obvious? EMAs and support. When you can find EMAs that line up with your levels, take note. These can be very powerful when combined with your levels. Those are confluence. You see this and you see this and you see this, put them all together. Now it's got more significance. While support and resistance or finding levels are valuable tools in your tool belt, they should be used in conjunction with other factors, technical indicators, candlestick patterns, other pieces of confluence to help you make a decision. Levels can help with the target to trade level to level and give confidence when the level was resistance and now becomes support. You saw it as resistance. Oh, wait, it's turned around. Now that's support. With extreme volatility, and that's when your ATRs are above 7, around. That's not a hard number, but about that. 7 and above. Levels of support and resistance tend to get blown out a bit, so your ranges may have to stretch. So tread with caution. Be careful. Volatility makes everything stretch. There's a rubber band effect. Just be aware of it. All right, now we just talked about this, but let's kind of go through these one by one and look at how many of them we can find. The goal isn't to necessarily check every single box, but you would like to find as many of them as possible. So what's a swing high and swing low? What does that even mean, Lidine?
Well, the swing high is probably, to me, the highest point where the price action's been, and the swing low would be the lowest point the price action has been multiple times if we're talking about it hitting multiple times at those points.
So on this chart, What's the obvious? Swing high,
Well-
swing low.
Obvious to me for the swing high would be there
Hmm.
and the swing low would be there-ish.
Ish.
Yeah.
This is a great point. This is a great illustration because everything we talk about, you have to look at with an ish, with an about. We've got okay, we drew the line, but now there's stuff below the line. Okay, don't sweat, don't stress. They're ranges, they're abouts. That is about the lowest point on the chart. Could you have drawn it here? Yes, you could have. But what Ladine's demonstrating is you've got an area where a bunch of times you're seeing this, and you're actually seeing it a bunch of times over here too. So we're looking at a range. Multiple rejections. So what do you see with rejections, or is there, let's kind of look at this range. This is a daily chart, so we got 500 points of price action. Is there a range somewhere in there that kind of cuts it in half? When you just sort of eyeball that, are you seeing something that's like, if I just cut it in half, am I kind of close to anything obvious? What do you see, Ladine?
Yes, I see a couple, but the most obvious to me would be about right in here.
Hmm.
I see another one if you want me to draw it just to kind of get, I see one up there. And then I see one down in here.
Now, I saw a different one. I'm going to use blue. I saw one
Okay.
right there.
I saw that one
Because-
too.
Okay. So again, there's nothing absolute about this. You're training your eye, and all of those are legitimate levels. All of those are legitimate price points. If you just sort of carry them out, are you by chance seeing anything significant with the price points? Are we sort of hitting roundish numbers? When you look at, now again, we're not looking at exact, we're looking at, wow, I never noticed that before.
Mhm.
So those,
You know what I might do here, Dean, is grab your region Y highlight and do her highs and lows. And then I would put back the one that you had on, the blue one, because you know what I saw is that blue one that you have on. And we
I saw
can,
that too.
yeah, we can go down each. What I'd like to do is go down each of those. So let's take all
that's a
three.
great idea. Yeah, let's do that.
Yeah. So let's use your region Y highlight, do the swing high, the swing low, and then that one in the middle. And let's go down each of those six, they're not rules, but 6 points to find our levels. And let's check them off as we go. And let's see how strong those are. Once we're done with that, then we can go to the next one in terms of, okay, now what else makes sense? The reason why I like that one in the middle, it stood out to me first, was it's 50%. It's about 50%.
It's about half, isn't it?
It's about half. And it's
Yeah.
always easier to start at about half and then go from there.
Now, do you want to do all the highlights first, or just do them one at a time?
I think that's what threw me. I thought we were going to do the region highlight and I would erase my line and then we'd go to the next obvious. So I apologize because I think I got a little
That's all right.
flustered. Yeah.
Hey, this is a working session.
Okay.
This is a working session, an introduction for our members. You guys are kind of used to the way we do sessions, and it's a give and take, and how about this, how about that? So we're formulating it as we go along too. And what's the most useful way to try and implement this concept? So do you want to do the middle one and the bottom one and just start there? Or do you want to try and do all those levels that she just listed?
I think
No,
we can
just-
do. I think we can do all those levels.
Yeah.
I would start with the swing high and the swing low, and
Okay.
go through each 6, and you'll see that you'll go through it pretty quick.
Yep.
And
Okay.
then have her point out the multiple touches where it's support and resistance. Obviously, it's not going to be support and resistance for the swing high and swing low, the top and bottom, but that middle one will.
Yeah. Let's go through the 1 through 6 on
And-
the swing high and swing low, and then on the next 3 levels that we see.
Correct.
Swing high, swing low. Okay, those are the two. Those are swing high, swing low. Did you want to do the middle one too, or leave that
For the next round,
Okay.
yeah.
Let me take that blue line off then, so it's not kind of getting in our way. All
Okay.
right, so go ahead.
So do we want to start over with that or?
Yeah, just keep going.
No, I
Okay.
would say let's just go through the list. So let's go up to, we already have our swing high, swing low. Now, number two, we're going to look for multiple rejections in a range. So do we see multiple rejections in a range on the swing high?
Okay.
No, that was a question. Do we see
Oh,
multiple
I'm
rejections?
sorry, are we recording?
Oh my
Oh,
gosh.
yes, I do. We have one here. We have one here.
There you
Here.
go. There you go.
Multiple.
All right. All
As you
right.
can see, we have multiple taps in the range that Dean
Perfect.
has put.
Perfect. So why don't we put a check mark next? There you go.
Okay.
All right. Is that obvious? Number three, is that obvious?
Very obvious.
Okay. Now, when the price, how did it react when it came up to there? Was
When it
there
came
there
up-
a sudden move away from that area at some point?
Pretty much right after the last touch, the market reacted and dropped.
There you
It
go.
reacted down.
So we have that one. So the next one, number five, they're obviously not going to both act as support and resistance because we're at a high. So
Yeah.
that one would be an X. But how recently was that created? This is a daily chart. So how recently was that created?
In between December and February, so sometime in January.
Pretty recent
Yeah.
for a daily chart. Yeah,
Sure.
pretty recent. So hey, we got 5 of the 6. Well,
That's a lot.
That's a lot. So that's so that seems to me like that's a pretty strong level, huh?
Yes.
That's a pretty strong level. So now what I like to do is go to the bottom one and Dean, erase all those check marks over there. And let's do you guys do the exact same thing on the bottom one. And let's check them off as we go. The reason why I would prefer folks to do this manually like this is because then they'll start doing it out of habit. You do this enough times, you go down this checklist, all of a sudden it becomes second nature and you're not using a checklist anymore. You're just seeing it.
Correct.
Cool.
Okay.
So we're on the swing low part of this. Do we have multiple rejections?
We do. We have one there, there, multiple, a lot. This is creating a very, very strong support level. You could even probably call that one a touch along with this one here. It didn't quite get there, but if it's in our range, then it is still trying to get there. Didn't quite get there, but it rejected. And once it did, it reacted. And it did so down here as well. It came down here, touched, and then reacted and went back up. Came down here, touched, back and forth, and then reacted and went up. And then came down here, didn't quite get there.
All right, just stick
close
with
enough for me.
Don't you're
and
jumping ahead.
reacted.
Let's go back to the end of January, because that's another gosh, week when we had multiple we had the price point hit that range several times, the price
Here.
action.
And here, again, and again. Yes.
Excellent. Okay, so we have not only multiple rejections like we did up here on the top, which is really just one series, but we got it twice. We've got it here and we've got it over here. So yeah, does it become obvious when you see that? I'm going to go with yes. That's especially with those arrows on there. It's like, yeah. Now that I see it, I can't not see it. It's burned in my brain. Now let's get to what you were just sharing a minute ago. What did the price do? How did the price react when it got to that level?
Well, like I said, when it came down to this level, it came down a couple times, didn't quite make it, but then reacted and the price action went back up. Same thing happened down here. It touched multiple times and reacted and went up. It came here. It didn't quite hit it, but it came close enough, in my opinion, and it reacted and it went up. Over here, the price action touched again, and it did react and it went up here. It did go up again here. And yeah, but it was kind of going up and back and forth. So you could almost say it reacted all times. When it hit down here, it reacted up and then turned around and came right back down and hit it again, went back up, came back down.
So I'm going to go with the not only obvious, but many times.
Yes.
It reacted the same. So far, it's reacted the same way in each of these. It's been support in both of these, the price action grouping in sort of this October, late September, early October. And again, here in late January, it did the same thing in each case. So in this case too, we would not have the support and resistance at that point. In this case, it's only been support. Now, how recent was, so that would be our X. I don't have an easy X on here, so let's draw it that way. We so have an X. So how recently was this level created or respected?
Well, from October through late January.
Yeah. So on a daily chart, we're looking at a daily chart. I'm going to say this is very recent.
Mm-hmm.
And this is reasonably, I'd say this is relevant. It's not super recent, but I'd say it's relevant because we're seeing it, you know, it really do the same thing, respond the same way. So I'm going to say that we've got a kind of winner here too.
Yeah, that could be relevant in the future as well.
Yeah, it can. It can, because and we're going to be talking about this in just a minute, where that middle section is going to really going to be nice. Again, you don't need all of it. You don't need everything. But again, we went through our little checklist, and we got the vast majority of the things we're looking for. They're there. The only thing that's missing so far is we don't have the support now acting as resistance. We don't see that piece yet. Okay, anything else we want to talk about with regard to those before we move on?
I think we got it.
Okay. The best part about this is it's all recent, and the multiple touches on the bottom show strong support.
Yeah.
So, you know, we want stuff that's recent too. I think that is going to be something that turns out to be key for people, because you can look back a long ways and find something that makes sense. So you can. So this is a really good way. So we could look at this daily chart and say, wow, I've got my first two levels on my daily chart. Yeah.
All right, let's move to the one in the middle, because that's the one that both Rob and I our eyes landed there pretty quickly. Let me draw what I think is going to be. Well, let's talk about it. This is what I see that as sort of the bottom. Oh, well, maybe not. All right, that's a line. Let me get rid of that. I see this right here. Do we want to make that part of our range? Make that part of our XY? Or
I think you could go either way here. You could do it a few points above or below, and it's all relative. You know, when I'm on a 5 minute chart, I'll do like a 2 to 4 point range a lot of times. You know, on a daily chart, you're going to be it's going to be bigger. It's going to be a little bigger, but you don't want to get too big. So I would say that I would definitely go down. And I'd probably go down maybe to the bottom of that blue one or the green one. Yeah, right in there somewhere. All
right, so let's
now you're also getting that sideways chop in September in that range as well.
By the way, when you're doing, let me take these off on my chart. I forgot to do that earlier. There we go. When you're using the Ninja tools, it's in your drawing tools, but you'll want to probably get familiar with the shortcut, which is Shift F2. So Shift F2, I'm going to start here and go down to there. Well, no, I'm not. Shift F2. I'm going to start here. There we are. Go down to there. All right. So that's again, we're looking at 20, 30 points on a daily. It won't be nearly that large when you're trying to make trading decisions. But it's helpful, I think, here to see that sort of large overview. So here we go. What do we have with regard to our multiple rejections in a range? Let's start there.
Okay, we'll start over here. In September, we see that the price action came up and we had multiple touches in our range. Here, there, Again here, and I think one more time there. So multiple taps. And then over here, it kind of went straight through. So we're not going to really look at that too much, as more over in December when the price action came and rejected and did not continue going down.
So you're talking about this right there, where it jammed through there, went above
Yes.
it, and now we're coming back down. Okay.
We're coming back down.
Mhm.
And then it tapped there, there,
Mhm.
there, and again there, right?
Okay.
And again here.
Yes, it did. It's easy to miss that.
Yeah. Now over here,
So
in
is this
this
acting,
area,
this is acting as what right now? Support or resistance?
this
In
area
the
that I
last
just-
touches that you just did, because this is kind of important to understanding how we talk about support and resistance. So your first one, it was acted as what?
resistance,
Okay, perfect.
because it resisted going through our level.
Yeah. Now,
Then the price action went through the level and came back down to our level and acted as support here and here. Then our price action basically blew through our support level and went down, came back up, and as Rob and I would say, I don't know what it was doing through here.
it was trying to be
Right?
support. It was trying to be resistance.
It was trying to be support and resistance, and you're going to get that sometimes. You just, yeah, what the heck? What do I do now? Well, I know what I do here. I don't do anything, because I'm going to wait till I get more confluence of what the price action is doing.
So we've got clear rejections over here. We have clear rejections over here, but from a different direction. I should change that to blue, I suppose. And here we don't know. This right here doesn't really tell us anything, because the market's going both directions. It's going through that price both directions. But I think the really significant part is this is such a good demonstration of where this price point has consistently been resistance right here, and it's really obvious that it's support right there.
Mhm.
Those are the O word. Those are the obvious. And over here we just don't know. It's not clear. But the obvious thing is that's clearly resistance. That's clearly support. Now we just looked at how it reacted. In this case, it went down. I'm going to change that color. In this case, it went down. Now this kind of doesn't matter. So it came up to that point, and then when it reacted by coming back down. When it got to this point, it reacted by going up. It reacted by going up. And again over here, we don't know. There is no obvious. But what is obvious is that we had a clear response. Now it would be one thing if it just went down to here and then over. It didn't do that. It went all the way down to there. So that's a much more striking, I think, indicator of what the price did. And this is the first time we get to check this. We're finding a level that's acting both as support and resistance at different times. How recently? Same thing. This is recent. This is recent enough to be significant. Okay, we're not looking at a year and a half ago. We're looking at the last 6, 7, 8 months. So I think this is a great illustration of that. What can be confusing point of this range represents both support and resistance. Any other comments on that before we erase it all?
5 of 6, right? So the only one we didn't have swing high, swing low, but we couldn't, just like we couldn't have the support and resistance, for the first one. So yeah, great job. I mean, here's our next level, right? So let's move on to the next one. Now there's a level that looks pretty obvious, Lydia, you had said it, around that 4,700 mark, right?
Yes.
Yep. So right in there to where there's a pretty strong resistance, right? That's resisting going up right there. And when it did get above there, it came right back down. So why don't we go through all our numbers here and
that
see how
range
many
about right?
Yep. Looks about good.
Okay.
Okay.
I'm going
So
to use all of my pretty colors here because I'm kind of trying to do that to also distinguish as we're going through the groupings. We're looking at different price points, but we're going through the same list. Okay, we're
Mhm.
going through the same list. It's this, the order isn't really doesn't matter, but it's significant. I think that we get the sequence down. We get the sequence down. So again, swing high, swing low doesn't really apply. But let's look at the multiple rejections. The whole
Okay.
thing is based on swing high, swing low. Okay, we've got that
Yes,
as our, so we're kind of working all of this within the umbrella of that.
correct. So we have multiple rejections on this last level that we just drew. We have one here and here. As you can see, it just got there and tapped, and then again here, here, multiple times. It truly, truly was not wanting to go through this level at
But
all.
wait, but wait, but wait, but wait. It went above our little thingy right there. Look at that little wick. It
Well,
went up. Doesn't
yeah,
that
but what did
just
it do?
doesn't that like invalidate the whole thing? It went through
No,
my
it
little
does
line.
not.
Oh,
What did it
no,
do when it went up there? How did it react when it went above our drawn level? It came right back down,
it's still
and
rejection.
it's
It's
still
still
rejection.
rejection.
It
Yeah.
did not like it. So when you have these wicks that pop out of your level that you've drawn, don't freak out too much. What you want to look at is if it closed above your level and then reacted and kept going the other direction, then you
Yeah.
have something else to look at. But in this case, in all these cases across here, when it did go beyond your level that you drew, it came right back down, didn't like it, wanted to stay in this comfort level here that it's in. So it did it again here, and then it came over here, did it 2 times, 3 times, 4 times, multiple times. I hope I got it all. Yes. And
Well,
then
yeah,
mhm,
go ahead. Go ahead. Keep
and
going.
then over here, as you can see, Dean, it's really trying super hard to break your level. It did for a second, came back in.
There you
Did
go.
it again here.
Yeah.
Went back
Yeah.
across your level.
This is, if you look up multiple rejections in a range of the dictionary, this is what you'll see.
Yes.
I mean, again, once you see all those red arrows, you can't not see it. It's like, holy cow,
Mhm.
that is so obvious.
It
It's
is very
so
obvious.
obvious. So how did it react when it got to that level? You keep wanting to jump into there because it's so easy
It's so
to
easy
look at
to
it and see what
do,
happens.
yeah.
Yeah. So now let's go to that one.
Okay, so it did react and it came down about halfway between our two levels here when it multiple tapped at this spot. And then it came up here, multiple tapped many times and reacted by coming right back down. Multiple taps, reacted, came back down. Now here it blew through our level and look, it came back up here and we could talk about that again, but we don't need to. And then over here, it multiple, I mean, we still have taps there, and after it hit that last time, Dean, and it did not stay above the level you drawn, look what
Mhm.
happened,
Woo.
reacted.
Yeah, that's the other dictionary picture of reaction. How did it
Correct.
react? Significant. Again, it wasn't, if we were talking about just this, let me make that bigger so we can see it. If we were talking about just this, it becomes arguable. Maybe we got the range wrong because this is so, because you see that, okay? You see it just going back and forth between those points.
Well, you ask yourself, is it just coming back up
Yeah,
into that area
yeah,
or is it
yeah,
really reacted? So that's kind of
yeah.
that's an iffy spot right there, of course.
But there's no iffy here.
No.
There's no iffy here. There's no iffy here, for heaven's sakes. I mean, we've got these massive, strong reactions. And let's see. Yeah, how did the price? We got those in. Got that in space. Look for the levels that act as both support and resistance at different times.
For this one, it's more of resistance level
Mm-hmm.
because the only time it went through was right here. Okay, it went through there
Mm-hmm.
and it stayed up there for a little bit, but it never used our level in question. as support, because once it decided to react up here, it reacted straight through our level again and then came back up and rejected it. So it is definitely a resistance level for me.
Yeah, I think so. I keep switching back and forth between sizes here to help make it easier to see.
Mhm.
That's of no significance. This is
Mm-mm.
not support or resistance. It's moving through, but holy moly, resistance, resistance, resistance. That's real, and it's, man, 1, 2, 3, 3 really strong clusters of resistance. So we've got, yeah, I erased those by mistake. Be obvious. We've got the multiple rejection. Be obvious. How did the prices react? They reacted, and they reacted significantly. Did we have both support? No, we only had resistance here. How recently was the level created or respected? Well, very recent. All of this, again, on a daily chart, all of that is very recent. So again, we've got the majority.
4 out of 6.
Yeah, we
4 out
got
of
4 out of
6, yeah.
6. And
4 out of
I'm
6.
going to say we have the swing high, swing low. We're working within that framework. So I would still add that. Okay. Anything else before we move on? All right. What's the next level?
All right. Let me get one out here. Let me throw one out at you.
Okay. All right. I am seeing, where would I make that level? I would make that level probably here, maybe going up a little bit. Does that make sense? What do you guys see?
Yeah, you could do that, or you could even come down and use the tops, that first green one.
Mhm.
What I would be looking though at is, where you have some other strong levels, where price action was. So
Maybe like between this blue and that
yeah,
green? Yeah, kind of there.
yeah, that might work. Yep, because then if I look all the way to my left, you might be able to use that as well. I mean, I'm sorry,
Uh-huh.
look all the way to my right. And
Yeah,
those
yeah.
last 3 candles, you can
Right,
probably
right.
incorporate
That's,
those as well.
yep.
So yeah, that would
Okay.
probably work.
All right, let's do that. We're hit those green ones. That's right on your red line.
Mhm.
Okay. All right, let's go through our punch list. Let me change back to pretty pink. We've got just sort of the given where the swing high, swing low, be multiple rejections in a range. So let's
Okay.
talk about that.
Okay, so as the price action's coming up here, it rejected our range right there, our level, and it did it again here. And then it did it again here, and it didn't break through our level going the other way. And it also here, multiple taps. Here. One more here, sorry.
Mhm.
And then over here, 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 and multiple times in that little area.
Yeah.
Yep.
That's spot on. That's
Good
exactly what
job.
my eyeballs see. I was trying to anticipate where you put the arrows. I was like,
I
yeah,
was
nailed
trying
it.
to hopefully
Nailed
see
it.
them correctly,
Yeah.
but as I was
Nailed it.
drawing the arrows, it was becoming obvious
It
to
was,
me.
wasn't it?
Yes.
And here's why I want to just reiterate this point. We're saying it's obvious. If this is the first time you've had somebody present the concept of levels, support and resistance levels, and it's not yet obvious to you, we're not saying this to be insulting. We're not saying it to be insulting. That's not the point of this. Because again, everything's hard until it isn't. Okay, everything's new until it isn't. What I mean by it's obvious is when you start having us circle or use the arrows, doesn't it become kind of obvious and kind of obvious and kind of obvious and kind of obvious and kind of, I mean, when you see it pointed out, it's like, oh, I may not have seen that with all those colored bands and arrows, but now that I see it, man, that really makes a lot of sense. I really see that.
The other thing too, Dean, is that as you go deeper into the levels, they're going to not be as obvious, okay? Because you've already used the obvious ones, right? The swing high, and the swing low is the most obvious ones you can get. Then typically you try to look and cut it in half, and there'll be a level in there. So those ones are going to be really obvious. So this is why you have the checklist, so you can go through it and say, because when we first looked at that, we were kind of like, okay.
Did we? Yeah. What do you think? What do you think? What do you think?
And then Ladine started pointing out those areas, and then it started be going, okay, here we go. Here we go. So great job, Ladine.
Okay.
Now before, well, okay, let's go through it in order. So how did the price react when it got to that? So again, working from left to right, how did the price react this first time?
All right. So after tapping on our level here a couple of times, it reacted by coming right back down. And again, in the next arrows that we've tapped, it tapped again and it reacted by going up. Came over here, it tapped on it and it reacted by coming back down. Tapped on it again here, came back down. Okay, went through this level here again, came back over here, it went through this level, came back up to our level, tapped multiple times and reacted. Okay, and then in the last sequence, it tapped and reacted this way. Wow, what does that tell me?
Boy, that's sort of
Tells me a
naturally
lot.
that's sort of but that naturally segues to this next one. This next one is, well, you know, in which cases was it support, which cases was resistant? Well, this first one, it's resistance.
It is.
I'm going to have to write smaller. Down here, it became
Support.
Here, it was resistance. This doesn't really count because it just blew through it. Over here, guess what?
Support.
It became support.
Mm-hmm.
All right. Now, again, let me take that one down, because it was support, and then we took a breath, and then it became resistance.
Yeah.
There's an N there. Resistance.
A lot of things
Now,
were going on during this time.
A lot of things going on. Yeah, maybe I should put it up there. Yeah, whatever. But you see the point. It went from resistance to support, resistance to support, and then again to resistance. That's not really atypical. That's pretty common. Now, it may not be common to see it bounce back and forth that many times, but this is part of what we're trying to learn learn to train our eyeballs to see, and that's, wow, it was both. It was both. That all that does to me is say this is a significant price point.
Mm-hmm.
If it's doing both, in one case it's acting as resistance, in the other case it's acting as support, that's a significant price point. I want to pay attention to that.
Right.
So multiple times of support and resistance. This next question, how recently was it at the level of, how recently was that level created or respected?
Well, that level was respected multiple times just recently in February, like days ago, it looks to me like.
Yes.
And late, it reacted through it in late January, early February.
Yeah.
But it's significant to me to go back to August and September and almost October, because what this level tells me is the price action likes it, because it keeps going to it and supporting it, then resisting it, and then coming back to it multiple times. So that's key for me.
Now, it wouldn't be insignificant if we just looked at this.
No.
But don't you think it's more significant when we look at this?
Yes.
It just like underscores it. It's like, this is important, but dang, look at that last one. Look at that larger view. This really underscores it. So how recent was it is a relative question. Okay. There's no, you can't answer that by a certain number of weeks or months. Okay. But you are looking, this is a context perspective driven exercise. And clearly this underscores the relevance of this. It just came and did the same thing, shorter time frame, did the same thing.
Mhm.
Okay, now that I've completely drawn a every color of the rainbow on here, any other comments before we move on?
Nope. I think
Okay.
that's great job. I think the folks get the idea here. There would be
Yeah.
one more maybe that you would draw, and that might be in this area here, something like that, right? That would be it. But let's let folks do that on their own. And take their daily chart and start marking up some levels. And if you'd like to bring it to a session, you're
Yeah, let
welcome
me
to bring it to any of the sessions.
let me piggyback on the comment you just made. There are going to be in reality, you're not going to be making trading decisions that encompass all of this price action.
Correct.
Okay, you're not going to have 100, 2, 3, 4, 500 points, 500, 600 points. You're not going to be doing that. So one of the things that you'll start doing is looking at within where I've just been, are there smaller regions that I want to explore, maybe in more detail? Let's look at maybe this to find other levels. Well, I mean, when I draw that box, you automatically start seeing the other levels. How about I look at this? Well, okay, that is those those are the levels. Okay, let's do this. Let's expand this way. Do you start to see breakdown? You know, it's easier to see that actually on a different time frame. But the point is, you're going to be seeing smaller levels within levels.
Correct.
Okay, you're going to be seeing smaller levels within levels, where you'll go through the same exercise, and the things that you simply cannot see on this, because this is a large, 30,000 foot view perspective. Now using that same concept on your 60-minute or your 15-minute or whatever will help you make decisions and execute on your 5-minute. So
excellent. So next session will be drawing levels on a smaller time frame. So taking these levels and putting them onto a smaller chart, maybe an execution chart, and being able to execute off of levels.
Excellent.
Cool.
Good.
Great job, folks.